Good morning, guys. All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be a general cryptocurrency market update and really giving you guys a heads up for the week ahead of us, because it's going to be a very, very interesting week. Lots of reports, lots of data reveals, whether that be company earnings in the US, which is going to have a huge bearing on the stock market. Crypto is very tethered to the stock market. You know, the markets are very much both crypto market and the US stock market are very much tethered together at the moment. So we're going to get a lot of earnings for lots of companies next week, lots of the big ones. And this, of course, is going to have an effect on the markets. And if this is negative and we get lots of negative earnings, that could, push the cryptocurrency market over the edge. And we are still very much on the edge, guys. Ultimately, it's a very hard market to call intraday. Lots of indecision. You know, you can see that in the charts. You know, we do have a technical pattern here, which could be deemed a double bottom. You've got the hallmarkings of it. You've got your volume that matches up with it. However, there's just so many external factors that have really driven the cryptocurrency market to really try and, the signs of strength. Okay, you can take them as a trade, but you're really betting against the larger trend, which is confirmed as a downtrend. Across all your indicators, we're not even seeing any kind of a divergence. This is very much a downtrend, guys. Doesn't mean we can't see rallies, and we've always said, look, if you're going to get a rally, it's likely to be here, given where the Nasdaq is on its 200 weekly moving average, and given the fact that you've got the base here and you could get the momentum behind you. But it largely depends on external factors. Some of what we're going to talk about in this video. This article from CNBC reads, another hot inflation report and the start of earnings season makes for a challenging week ahead. Absolutely. Now, this isn't in specific regards to crypto, but it very much applies to it, given how in sync we are with the equity market. Consumer inflation data, so the CPI and the start of the second quarter's earnings season could set the course for markets and result in volatile trading in the week ahead. Absolutely. The June Consumer Price Index, which is coming out on Wednesday, by the way, guys. So I believe that's the 13th. This is going to be a significant day. Is expected to show headline inflation, including food and energy, rising above May's 8.6 level. So the consensus, I think, at the moment is around about 8.7. A higher print is absolutely going to be negative for markets. Certainly when Jerome has the backing of the labour market, the non-farm payroll data, to continue on the path that he's on, which is a bad one for markets. My ultimate view, and I've been saying this for months now, is that, we're in a predominantly cash position. The reason being is I think I'm going to be able to accumulate crypto across the board a lot cheaper. I don't think that going into a recession, and how do we know when Bitcoin's never been in a recession? Well, we can look at the likes of the Nasdaq, which has indeed been in a recession, and see how that fared, and kind of summarize how we think the cryptocurrency market is going to act in a recession. So Bitcoin was born. Still, I'm going to continue to repeat this. I know it's kind of like Groundhog Day, but born, in 2008. Markets have just gone up since then. We haven't seen a recession, and if you look how we act in a recession, it's my opinion, and we're at this key sort of turning point here, that even if this rally does extend, it's not long before we come through this 200 weekly moving average, like we did in 2008 crisis and like we did in the dot-com implosion. Crypto broadly is going to follow, but it's a very hard market to call sort of intraday, because certainly at the moment, over the past 2 weeks has especially been the case, and the overall consensus that we've had, and we've been talking about this for a long time now, just like we were talking about this as a bear flag, is that this is going to turn into some sort of a bear flag. Doesn't have to be a bear flag. Let's say we did get the rally, it could turn into some sort of a rising structure. But ultimately for me, this still very much looks like we're in bear flag territory. And your volume actually supports that. It's only going to take one bad set of news to cause fear into markets and pushing them further down than they've already been. And we've got actual things happening within the cryptocurrency market, like the Mt. Gox issue that's going to become a growing story. We spoke about this on a couple of videos now. Essentially, Mt. Gox was an exchange that was hacked. There was lots of Bitcoin. I think 850,000 Bitcoin were stolen. and they've managed to retrieve 137,000 Bitcoin, and essentially they're looking to give them back to the people that they had, that the Bitcoin were initially stolen from. Many of these people would have bought Bitcoin sub $500. It's logical, and I think they should sell. So that will be a huge sell pressure that's internal. It doesn't look like that's going to come till August, but still, these are all factors that are driving this very emotional market. And volatility looks key, today, because you've got the anticipation of the US futures market opening, and you've also got, going into the actual markets opening tomorrow. So it's going to be interesting. I'll watch the Asian markets overnight, and then I'll see how the UK stock market opens, and then kind of, I think that's going to maybe set the tone for the week. But it's certainly going to be an interesting week ahead, given all the kind of data that we've got coming out. CPI being the big one. If that comes out hotter, expect markets to react badly. If it comes out low, it's a tough one, because even if, let's say, it dropped by 60 basis points down to 8, which would be a significant drop, certainly given that we've just had nominal price movement in the up direction for inflation. I think markets may take that as relief, and that there's an end coming to Jerome Powell's war on inflation. And this is really the driving story, is Jerome and him. Ultimately, when you take an up interest rates, it takes liquidity off the table. That's why we see the dollar spiking. That's not good. What drives markets ultimately is liquidity. And if the liquidity is scarce on top of a recession, which would cause an even greater restriction, certainly from a consumer point of view, in terms of liquidity going into markets, it's not a good look that we've got moving forward. I think the dollar, it absolutely ran. You've got a bit of a hammer here, so it could take a bit of a break. You might see some of your FX emergings gain a little bit of traction here. But ultimately, this is going to continue. If you understand fundamentally why the demand for the dollar goes up when they up interest rates, it makes a lot of sense to me that we're going to see dollar continuation. And Bitcoin actually held up relatively well. Are we now just going to enter? Is this going to essentially, we'll drop down to the 4-hourly, turn into a range-bound environment? I'm seeing so many range I don't know where all these range traders have actually come from. Everybody's a range trader now. It wasn't really a very popular state of play not that long ago. But, are we essentially going to come into some kind of a range-bound environment now, like we did over here, where people will maybe take this and run with it as a deviation coming down into your sort of midpoint? And are we just going to start, chopping again? The issue you've got is there's been an active effort, and we've seen whales try and sort of hold this up and push us back towards 20k and above it. But once this falls, you're in a world of pain. And we spoke about the fact that you're actually consolidating right now, really in hot air. You're kind of backfilling in some of the bull market's expansive movement. So you're sort of filling a void right now. You're really consolidating between two areas that actually did have some price interaction, but the volume that you're in is very skittish. So you're probably going to fill this in and then ultimately roll. You take this one out. You take this area out here, you've got another area of hot air here. And you can see just how, where you didn't really find your resistance in here, you found it coming into this range. So it's going to be very interesting. Ultimately, I'm still exceptionally bullish on the crypto space and really believe in the future of it. Same jokers turn up every time telling you how garbage it is and how there's nothing innovative here and it's just a speculative bubble and all this nonsense. It is in some respects a speculative bubble, but there's absolutely innovation. I genuinely believe that blockchain is going to change the world. That's been a thought that I've had for nearly 4 years now. It's what's kept me in the game, and ultimately, I still think that's very much the play. I just think we've got this challenging time ahead. That's going to be a new environment for Bitcoin and the crypto space to navigate. So it's going to be interesting. Also, just very quickly, talking about how this is a very low area. We'll just do up to the May peak because this was really the run. Your volume here was pretty much non-existent. In fact, it was one of the lowest areas in terms of volume where you're currently on. So you're really just backfilling it. you didn't really mess around here when you were going up, and that's kind of why we're trapped between this area of consolidation and this one here. And a break to either would be positive. There still is the room for, you know, more market upside, and we've said that that could come from maybe the tech sector, although I don't see how with earnings, if I'm being quite honest, given the fact that it's 200 weekly moving averages. Maybe this sees a bit of an extended rally like we've seen previously interacting with these levels. You know, you're 8% up today. We won't count the March 2020 capitulation, but typically you do get a decent bounce here, even going into a recession. You know, so there is definitely still a scope for upside. It's just that for you to bet on that, you know, we got stopped out of a couple of longs yesterday. For you to bet on that, you know, you're betting against the broader trend. And I don't think that's wise to do in such a confirmed downtrend, you know. So it's just like we're really just hanging on. For me, it feels like we're almost just waiting for a Lehman's moment, you know, where markets go, okay, right, well, now we are up shit's creek without a paddle. But that's really all I've got for you guys. Try and stay optimistic out there. There's plenty of reasons to be optimistic on crypto. One of the big ones for me is I'm absolutely filled with excitement in regards to, you know, getting the opportunity to accumulate some really cheap crypto, because I think we're going to get it. You know, I think for me, Bitcoin's looking at 15K. I'd be surprised if we didn't see 15K. And then we'll see what the lay of the land is when we get down there. All I've got for you in this one, guys. If you've enjoyed the content, a like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video.